welcome. You're watching Your Stocks on CNBC TV18. Well, joining us this afternoon, we have Rajat, Bose as well as Sharad Avasthi to answer all of your queries. It's turning out to be a day where we are seeing a pullback come through from the markets after yesterday's steep fall. So we have the Nifty, which is recovered back to levels of around 22,500, and the mid-cap index, which is up close to around 2,000 odd points at this point in time. So good going for the markets. We have the Bank Nifty, which is up around 3% as well. Rajat, let's start off the show with you. It's turning out to be a day where we are seeing a pullback come through for the markets. What is your sense in terms of how you would approach key levels now?
Well, good afternoon and thank you for having me. I would say that, see, whatever has happened yesterday, you may call it an aberration or whatever. I mean, in any way you can describe that. But for a technical analyst, yesterday, the high was, I think, 22,550, 23,180, and it went down to as low as the 200-day exponential moving average, which was located around 21,200. So this is a big fall, and this has engulfed the range for the last several months. So this is a reversal signal in the Nifty. That means, and another thing I would like to tell you here is that on the weekly chart, there is a strong negative divergence on 14-week RSI, and that means that there will be a substantial correction. It may be a time correction, maybe the fall may not be great, but at least the upside is capped for now. So this today's encouraging movement that you see, it is just a pullback. And if it were to manage to stay above, say, 22,600, then there could be another upswing which could take it to something like 22,800. On the other hand, if it were to fall below 21,900, 21,800 support area, then it might retest its Nifty might retest its 200-day exponential moving average at 21,200. And Bank Nifty is almost in a similar situation. It has moved up to, say, 51,000 levels, but it was only 10 points short of that. And now it has come down to 48,427. But if it were to fall below 48,000, then again there will be some weakness signals and it can go down. On the other hand, 49,000 to about 49,500 would act as some kind of a resistance. So it will be more like a range-bound scenario now and a steady decline over over a period of, say, a couple of weeks or so. Because even if you have to build up for the budget rallies do not last for more than 15 days. So that is still some time. So there would be some kind of a correction.
Okay, all right. Sharad, before we move ahead, any of the stocks that you would recommend? I mean, we have a lot of the FMCG stocks which are flying away in today's trading session. But, you know, the entire PSU lot saw a big drubbing yesterday. Anything that you think are attractive at these levels?
Well, on the FMCG side, I think ITC still continues to be an attractive story to bet on. We are working with initial targets of around 550. I think valuations are still the cheapest within the whole FMCG basket. Paper should do good, hotel should do good, and the pure FMCG business should also show some traction because of the rural improvement that we are expecting across the board. Dabur was the other top bet that we were looking within the FMCG stocks, but I think Dabur has gone up a bit over the last 1 or 2 days. So right now, if you look at FMCG, it's only ITC. Within the PSU basket, I think across the board, we are not really going around shopping on these stocks. 1 or 2 stocks here and there might be good bets. I think LIC would continue to be a good bet there. I think even if it trades at, 1.4, 1.5 times embedded value, the fair value could be around 1,300, 1,350. So that is a decent stock. We have seen some correction there yesterday because of this election fiasco. So I think within the PSUs, LIC would be my top bet. I would be comfortable buying it for 1,350, 1,400 kind of targets. And within the FMCG basket, obviously, ITC would be my top bet for targets of 525, 550.
Okay, all right. Well, let's get in some queries now. We have Rasika Sharma, who writes to us from Mumbai, holds 30 shares of Yes Bank. which she's bought at around 20 odd rupees. She wants to know the prospects of her particular investment. So she's currently bought it at around 20 odd rupees, currently sitting at around 22.6. So sitting on a bit of a profit there. Wants to know what the prospects are. Well, over to you, Sharad, on this one. Yes Bank, we were just discussing the entire banking space, PSU banks, but Yes Bank in particular, what would your recommendation be? Do you think that the overall cycle of NPAs and, the reduction or the cleanup in the balance sheets and the good governance is going to continue?
Yeah, I think that is largely a done deal. I think most of the issues with the prior management have been sorted out. Now, your upside will largely depend on what happens with the stock in terms of change in hands in the major shareholdings. So, which we expect that it should happen over a period of time. And if that happens, I think that could happen at a substantial premium to current prices, the type of interests that we have been hearing in markets about the type of entities that want a stake in Yes Bank. With this electoral difference, I don't think it'll be a very material differentiator. It might take a bit more time, say 1, 2 or 3 months more. But beyond that, I don't think it should be a large problem. So if the deal happens, I think you could be looking at targets somewhere around 35 to 40 on the stock. And that could provide you that kind of impetus. But if you don't want to bet on the deal, I think at these valuations and whatever numbers they can pull out over the next, 1.5, 2 years, I think it's largely fairly valued. But I think she should continue to hold and hope of the deal. I think there's not much downside from current prices. Maybe the upside is capped, but if the deal does go through, I think you have a decent upside of another 40-50% on the stock.
Okay. Well, Rajat, 35-40 I think is the target that Sharad has on Yes Bank. What would your technical call be on it?
First of all, technically speaking, one should put a stop loss at 2050. If it were to close below 2050, then one should seek an exit, because in that case, the lows around, say, mid-March and also recent past, those would be violated. And to acquire fresh bullish gumption, it requires to get past 24.90, 25 kind of range. After that, the next target would be around 29. And only when it crosses 32, you can expect a real strong move up. But before that, there are lots of resistance, and there could be a lot of selling as well. Unless, of course, the kind of bullish event that Sarath is expecting, if that happens, then it's a different ballgame altogether.
Okay, all right. Well, all of the sectoral trade indices are currently trading in the green. So that's the kind of market that we have on our hands. Mid-cap index up around 4.2% at this point in time. Nidhi Bose writes to us from Kolkata. She holds 76 shares, which she's bought at 315 odd rupees. She's asking if it is advisable to stay invested in the company or not. So she's currently sitting on a good profit at this point in time. And she's asking about Hindustan Zinc, her holding in the stock, and what she should do with it. Well, Rajat, you go first on this one.
Well, I would say that if the investor is actually a long-term investor and willing to hold it for several years from here on, then no problem, you can continue. Otherwise, if it were not to take out 750 in this current recovery upswing, then you should come out of this stock. Because, see, this stock, last year, I think it was around 300 and it has come up so much. So there will be some kind of a correction. Correction was happening, but now it is trying to recover. If it fails to take out 750, then the correction would deepen. So that's why I'm suggesting getting out of it. But for a long-term investor, meaning 5 years or so, it's a good stock. It will go places.
Okay, all right. And Sharad, what would you recommend on Hindustan Zinc?
Yeah, I think you should exit what it's trading at 28, 29 times forward. These are obnoxious valuations. Though they were talking about some demerger, etc., happening, and maybe the silver business and a lot of capex that they're doing. But I think at the valuations at which it is trading, it largely discounts most of the positives that can possibly come in over the next 2 to 3 years. And obviously, there is a commodity cycle impetus, which people are betting on right now. But I don't think it's going to last. It's a very sustainable thing to do. So at these valuations, I think it's best you exit these stocks.
Okay, all right. Well, Aditya now writes to us from Tamil Nadu. He holds 150 shares of BEL, which he purchased at around 237.4 each. He wants to know what to do, whether to consider profit booking or to hold on to these shares. So he's just about, flattish to marginally positive at this point in time. So what would you recommend on this one, Sharad?
I think if you can elongate your view, you can continue to hold with this election outcome. I think most of the confidence has gone down regarding most of the defense names. But my personal perception is that this is a juggernaut that's been set rolling, and I don't think with a change in government that is going to reverse anytime soon. So across the board, most of these companies, will get more order books. The order books will bloat. Obviously, the international scenario will also play out. But right now, the next 5 years, at least, this government seems like it is in place. More confirmations we will have by evening today. So I think it's a decent bet to hold on to. It has corrected substantially. Maybe at 300 rupees, it was way too expensive. But at current prices, I think it's roughly fair value. But you have to hold on for around 24 to 36 months. Then maybe it trades at 30 times. So the upside might not be very much very high for these stocks, but the upward re-rating on numbers can be very strong. Right now, the numbers we are working with is around 10-15% annualized growth on the bottom line. So for 27 earnings is around 8-9 rupees. Maybe you bloat it up by 15-20% higher. So you could be looking at 10-11 rupee kind of earnings. On that, if it trades at around 30 times, I think 330, 325 could be a long-term target. But that's not leaving much on the table. So I think if you are a very long-term investor and you want to bet on the re-rating that defense can see, you can continue to hold. But if you have a horizon of 18 to 24 months, I think it's fairly to fully valued. You get a chance on the upward move maybe tomorrow when there is more confirmation regarding what the government is doing and how the government is getting formed. You can use that rally to exit it also.
Okay, all right. What about you, Sharad? What would your view be on BEL technically? Rajat.
Yeah, I would say that, see, in 3 trading session, it has come down from 323 to 230. That means a kind of 30% correction from the top has already happened. Even though time has not elapsed, only this is the third trading session that is going on. So correction that were to happen has already happened. Now, I don't think it will go below the strong support zone between 230 and 220. I would suggest a hold unless it breaks 220, which should be the investor's stop loss. And if you consider it as a defense play, then just continue with it, because ultimately defense plays, they enjoy very big discounting all over the world, and you have to have patience. And otherwise, it's a very good company. I mean, if you get it at lower prices, even buy more.
Welcome back. Well, we do have a very lively market on our hands and a lot of queries also coming in. So let's get to it. Uni Krishnan writes to us from Chennai. He holds 30 shares of PNB Housing Finance, which he's bought at around 814. He's a short-term trader and wants to know what to do with this. Rajat, over to you on this one. PNB Housing, 814 odd, short-term investor, sitting on profits, sitting on a loss.
Yeah, I would say that if he's sitting on a loss, but he needs to monitor the current level where the 200-day exponential moving average is now located. It is around 712.13, the current level. If it were to cross that, then it can move up to something like 750, 730 to 750. But do not expect more than 750 kind of levels. So don't book your losses right now. Wait, there could be a little more upsurge and then exit. Otherwise, put a stop loss below 695.
Okay, all right. Well, that is PNB Housing Finance and the target there. We have Vinod who writes to us from Hyderabad. He holds around 6,500 shares of RailTel, which he's bought at 388. He's a long-term investor, wants to know what to do with this particular counter. He's sitting on a loss on this one. From a long-term perspective, what would your view be on RailTel, Sharad?
I think long-term, the advantage that they have is the right-of way that they have, which is a difficult thing to get for most companies along the railway lines. They have a very strong network there. And they are trying to expand into other areas. The data center business, they are trying to expand. They already have an order book of around 4,400 crores. And I think revenues would grow at 15 to 20% over the next 2-3 years easily. The bottom line growth would be much better. So, but in terms of valuation, I think that's the only part which concerns me. But if they can, snap up the business the way they are talking about, even they are guiding for 20-25% growth. So if they can manage that kind of growth, they are looking at 4,000 crores kind of fresh orders also. They're bidding for them. So the data center business should also contribute in partnership with another company. So I think 100 crores kind of revenue should come from there. And the company should do around 3,500 to 4,500 crore over the next 2-3 years. Valuation wise, I think it's a bit on the steeper side. Even if we expect, 15-16 kind of earnings over the next 2-3 years, I believe the current prices are already trading at 30-35 times. So there, I think that's a bit of a problem area. Unless and until the numbers get re-rated upwards, the probability of RailTel going higher from current levels looks like a remote possibility to me. So I think keep a close watch, whatever Rajat is advising in terms of levels, keep a close watch on those levels. But valuation wise, I think it's roughly fairly squarely valued, even if I consider 20, optimistic side. If I consider, that it continues to trade at 20-30 times, then maybe you can look at, 400-450 on the stock. But generally, I think the valuations seem to be fully valued 20-25 times.
Okay, all right, fully valued at 20-25 times. Well, Abhishek now writes to us from Mumbai, holds 15 shares of Rain Industries, which is bought at 350, wants to know what to do, whether he can hold or sell, and whether he can hold this stock for the longer term. Rajat, would you have a quick view on this technically?
Technically speaking, I think unless it falls below, say, 140, one need not get out of it because its correction is more or less through. Especially yesterday, it went down to 130 kind of range and then bounced back. Now, you will see some upsurge only when it takes out 175. Other than that, it would be more of a range-bound situation.
Okay, all right, fair enough. Well, Rajat as well as Sharad, we're going to let you go on that note. It's been a pleasure always to listen into your views, and I'm sure today was an important day to get a lot of these retail queries in, considering it's one day post the election verdict. But as you can see, the markets are in fine fettle at this point in time. We have the Nifty, which is up around 3%, the mid-cap index up 4%, and a good advanced decline ratio, which has sustained through the trading session. That's all the time that we have on the show. But do remember to email us your questions. We'll address them with our experts. Closing bell up next.